Oh, I gotta delete all this stuff. Good morning, mofos. Gotta turn on my do not disturb. Wait for everybody to get on. Move to trash. We're gonna move that to live chat. Open up the podcast. I gotta go over to yesterday was a long one. Morning, Joe. Wah, wah, wah. Good hike yesterday. Good hike. Good hike. Hit the thumbs up button, by the way, if you're here. Cleveland Cliffs under 14. What do I have on my notes? I have a lot to go over. Let's look at this, though. This is XLK. Okay. XLK, XLE, EUP. 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 There we go. Add comparison. SPY. XLE. XLU. XLP. And let's do XLK. There we go. Okay. 1 month. We got a bit of a oof. Oil, man. Oil has just been, Joe, our oil trade. While we wait for it to go back to 250, while everybody else stays out of that one, I mean, you're getting an 11% dividend. So I want to see if they have an update. The ChatGPT portfolio. Here are this week's picks. Okay, I gotta get the dog's bed. Okay, I'll go get your bed. Hold on. Hold on. Penny's up on the couch. You're a good girl. Okay, here you go. Okay. Yeah, I'll bring it up on the podcast too. PXD under. Oh, you know what? I do have a note. I think on. Yeah, I'm gonna 200 because I have a note on Chevron today. We'll do oil all in the same breath. Okay. Let's see. The ChatGPT portfolio. Oh, is it right before the ex-dividend date? Let me look at PXD. Man, Joe, I can count on you. Ooh, May 31st. Yeah, good point. Man, I can count on you. PXD under 200 right before. Is it today is the ex-dividend date? Hold on. PXD. I don't know if it tells me the ex-dividend date here. P. $6/1/23. Okay. $3.34 dividend. Today. Okay. What's $3.34 divided by 200?
The answer is approximately 2 cents.
No. What's 200 divided by... No. What is 334?
Sorry,
No.
I didn't get that.
What is 3.34 divided by 200?
The answer is 0.0167.
Okay. So you're making about 1.67% just on this. For one day. Woohoo! Okay, so we have that. We'll bring that over. I got that note. Joe, thank you so much for that one. By the way, yeah, PXD, Pioneer Natural Resources, myself, Joe, a bunch of others hold it for the 11.36% dividend. Don't think it's yielding that much. That was $5.58 back on 3/6. They downed it to $3.34, but you can see it's between 8 and 7 and 5. I think they'll keep a 10 to 11% dividend. I think you're going to see oil prices go up over the years, so they'll have more money. But right now, oil prices are a bit haggard. 591, 521, 748. They were making more money as oil was significantly more expensive. So that's the problem that you have is oil. It's just coming down in price. And that is where this one is getting killed. Yeah, it is. Just confirmed here, Pioneer Natural Resources. This is from their investor page. Record date of 6/1, so you have to hold it as of the close today, essentially. So it is PXD. I've got a bunch of this. I'm just holding it for the dividend. When it was announced that Exxon was looking at buying them, 250 was the quote unquote rumored purchase when it was around 208 down here. Right now you're trading at 199.39. So let's move to some scans. Hit the thumbs up button, by the way, if you are here. Let's move to the scanner. We're going to go to brokerage holdings. I probably should restart this because it's going to... Ooh, XLY. Consumer discretionary. XLY. I did, by the way, post, and if you haven't subscribed, I got a lot of responses. I got more responses than I thought. But I was kind of hiking. I was hiking over the weekend, and I said, I got to start that newsletter. I always promise to start a newsletter. And then thinking about it, yesterday it was like, man, a newsletter is probably good for people who don't have the time to listen every day. Because what I'll do is I'll just type up my notes, scan them in, do whatever. I was having some problems with Substack last night. I got to learn Substack, but it wasn't allowing me to type out as much as I wanted. Still no energy stocks in scan. And so I thought, hey, DRN had a cross up, by the way. DRN, SVXY had a cross up. I would not do XVXY because I don't think that the VIX is going down. The VIX is currently at 17. I don't think you want to, but hey, have at it, Hoss. Morning, CCB. But yeah, I'll start the newsletter maybe today. I'll figure something out, and maybe I can send out like just a picture of the thing. I got the header, I got the footer, I got the welcome email out there. I spent about an hour or two last night, and then your boy just got tired. Your boy got sick of it. I'm just done. I mean, when I spend an hour on anything, I just get annoyed and kind of put out. So I spent a bunch of time yesterday. By the way, Meta shareholder meeting today with Meta. Expect craziness. Expect, at this point, I wouldn't put it past Mark Zuckerberg to change the company name to AI. He changed it to Meta. Why wouldn't he change it to AI at this point? So that shareholder meeting should provide some good opportunities in the stock. Meta from, who was it? 3 picks from Mark Mahaney, Evercore. He's got a $350 price target for Meta, which I don't think is crazy. Honestly, I just don't think it's nuts. I'm going to restart this real quick. Let's restart. And we will go to the default workspace. We're in the market scanner. We'll go to market scanner. We're going to go to spider sectors because we've already done everything else. Scan. Boom, boom, boom. Yeah, but Joe, killer suggestion on that XLC, XLRE. Wow, real estate got a bump up. I was not a fan of the Trump presidency, and it wasn't. I mean, listen, sometimes you're a fan, sometimes you're not of presidents, whatever. I was not a fan of Trump himself, I should say. But some of his cabinet people and advisors, Gary Cohen, who was a financial advisor, was on CNBC today, and he left after the president just went fucking psycho with that whole Bible holding up in front of the church and stuff like that. But he was on this morning, and he said we just don't have enough houses for people in this country. And they had done something, and he said the worst thing you can do to your economy is backstop a 30-year mortgage. And he goes, we've done it successfully, but we still don't have enough houses, and there's not a good solution to fund housing. I've had several friends of kids of friends who have graduated, and I tell them all, listen, you're going to have to work twice as hard as a lot of us had to work to do what needs to be done. So, okay, spider sectors are done. Let's look at my not owned. I know there's going to be Boeing. We have that one in there. Home Depot. Smile Direct Club. Lowe's. still in there. Baidu. Rocket Mortgage. You know what I am going to put in here? I'm going to put SOFI because I'm going to put that in here. Charlie from MLS. SOFI got a huge bump yesterday, by the way. There's a 0.34%. I mean, it's just going above its 200-day, but SOFI is. The debt ceiling limit stuff, they are voting on it today. It would stop the student loan. Basically, people would have to start paying back their student loans, which, listen, you took out the loan, you should pay back the loan. I don't care if it's making you, hard to live. You took out that loan. It's kind of like the bank executives. They made bad decisions with other people's monies. Well, the loan is other people's money. Bank executives should have to pay that back. Student loans should have to be paid back. The only place I am in favor of it is Gabriel Santos. Big fan. But the only place I'm for it is like nurses who are forced to take out loans for their licensing and then have to work in rural places. I mean, it's been shown there's a lot of issues with that where they just can't pay back the loan based on their salaries. Hey, at that point, I think you should absolutely be given special treatment, specifically for high-risk stuff. But, somebody who decides to go to ballet, you go to school, gets a ballet degree, can't find a job in ballet or can't do what they want to do, and they have $100,000 in loans. You chose freaking ballet. You chose that. And, well, most likely, there needs to be 100% a better, you can't get a loan if you're going for ballet. Can't get a loan if you're not going for computer science. Can't get music is one thing. Music, I tell people this all the time, music builds. And if you're a computer programming specialist or you're trying to do, music, if you learn music, computer programming is just cake. It's cake. I don't like any of these ARK holdings other than Coin under 60. Coin might be a good buy under 60. But it's giving back all of its gains from yesterday. Okay, let's look at the Dow 30. And then I'm going to look at anybody in... Intel. Intel under 30, and it crossed up. That's an interesting one, because that... listen, I would not put it past Pat Genslinger, I think his name is. Gesslinger. I forget how you say his name. But I would not put it past him to say, to be out there and to say, we have a new AI chip. Cintas, the uniform people, not a fan. Zscaler's interesting. I'm going to put that one on there. Zscaler is cybersecurity, I believe. Let me see. I think they are. Software. Cloud security company. Losing $324 million. Market cap of $18 billion, so it's small. It's up 20% year to date. The average target price is $156. You're trading at $134. The most recent May initiated coverage with a $135 price target. In March, $125 price target. You are trading at $134, so it's a bit extended, but it's got a secondary cross up, I think. Yeah. And that wedge. I'm not sure I'm buying. I mean, to be honest with you, I bought NVIDIA. I did not buy TQQQ because I couldn't get in there, but I'm not buying it because it's extended. I'm just not buying a lot in this market. Lowe's, Intel. Let me go. Is there anything? This is what I'm going to do. I want to look at energy names. Energy names in the 65-minute scanner. So Oxy's currently a buy. CVX is a buy. PXD is a buy. Here's the thing, Joe and everybody listening. The 65-minute scanner, which is a simple buy above the EMA, the 8-day EMA, sell below the 8-day EMA. I mean, it's a simple. Yeah, because NASDAQ's going down, Urash. I mean, I've been saying, remember, TQQQ, you have to trade it. You can't own that one. It's a triple levered ETF. So take your profits. Understand, I use the 9-day EMA. Let me see. I'll move you over. Hold on. Let me show you my day trading screen. It's Active Trader Pro, and I use a very simple strategy. And we'll look at TQQQ. Let me go up here. So I miss out on a lot, but when I day trade on a 5-minute chart, and I take a look, and I have a 9-day EMA and a 21-day EMA. I have the pink line is the VWAP. It is underneath the VWAP. I would have sold probably on the open at about 35 at about 5 a.m. this morning. Yesterday, you weren't above the VWAP, so that might have been an indication for me to sell. But here, we'll move this back. I'll extend this. There we go. So this is pre-market yesterday, and this is yesterday's TQQQ. Were you down yesterday? You opened at, I don't know. Looks like you were down. You were at about 36. I mean, honestly, my target was 36. I bought I said buy at 32 on Friday, and 36 was the target. It hit 36, bounced right off, and you're at 35.08. You're at 34.93. You are not in confirmation territory. I would have absolutely sold on open yesterday. 100% sold on open. I may have bought again if I was day trading here where you had confirmation. Lost it, gained it again. I might have, right. This is a good, here, I'll show you yesterday. Here's yesterday. So here's when I'm talking about confirmation. Now, listen up, degenerates. This is how you trade. You want to find something you're comfortable with. For me, it's the 9-day EMA. I have a 5-minute chart here. This is yesterday's activity. When it got below the 9-day EMA, I wanted to sell. When it's above that 9-day EMA and it has confirmation, I want to look for continued candle confirmation. This is a great indication right here. Look at this. So it got above the 8-day EMA or the 9-day EMA right there at about 35.30, it looks like. And you had confirmation with the next candle. That's 5 minutes. You had plenty of time to buy it at 35.30. You have the 9-day confirmation. It continues up. Then it comes back down. At this point, you have the opportunity to sell right when it touches through the 9-day EMA. You might be getting out too soon, but any profit is a good profit if you are day trading. TQQQ is not one to play with. Do not hold on to it. I said on Friday, I think this might be a good time to get it at the open because it was at 32. And I thought we were going to have a debt ceiling limit because Jim Cramer said he thought the debt ceiling, we would default. Inverse always wins. Jim Cramer's a douche. Number one rule of this podcast, do not listen to a douche on the internet. That includes me. Trading yourself is your own fault. Rule number 2 on the podcast is do not listen to Jim Cramer. He's a douche. He's old. He's senile. So, yeah, he doesn't know what the fuck. He's entertainment. 100% entertainment. Nothing more than entertainment. So, do not listen to him. But Pioneer Natural Resources is a buy at 206.37. This is what I was telling you, Joe. The 65-minute algo, if you can get this, it's opening up under 200 at 199.39. Today is the ex-dividend date, so you have to hold it by the end of the day today. That's a great one. I like that. So I've got my scans. I've got my 3 picks from Mahoney. Let me look at this. We're going to look at SPY and stuff too. Because we rejected off of 420 again. This one is down 5% at 41. If you got in, this is what I'm going to show you on the 4-hour algorithm that we have. $18.43 on the symbol AI, and you're up at $43. You're at 41 before open. Take the hype, run with it. NVIDIA is under $400. I think you're probably going to pull back to 380. But remember what I said? We want to, if we continue to close above 368 for 3 sessions, this provides us support at this point. 368, 370, you're opening up at 393. It is down 2%. If you are looking to get into a position, this could be the time to get in under 400. It is a bubble, 100% a bubble. Doesn't mean you can't make money on it. Costco is above 500. Let me get to SPY. I'm going to start out on SPY. Let me see. I'm going to move this over here. Now I'll move this over here. SPY. We've broken out of that ascending wedge. This line right here at 416 is going to provide us some support. Let's do an auto fib. See? Right there, you're going to provide some support at about 416.86. I'm not going down to the pennies. I do not. I don't have a monthly cash flow. But my monthly cash flow, everybody's different. I don't make a lot of my finances public. I do have a very large portfolio. I do trade mostly on a swing basis, not a day basis, because I've got busy days. But I do not, my cash flow should not make any difference to you guys whatsoever. If somebody's standing in front of their brand new Tesla, if somebody's taking a photograph in front of a brand new house that they just bought, if somebody is flashing sneakers that they paid for or something like that on Trader, do not follow that douche. If they are flashing cash, do not follow that douche. There are people out there who do not do that, who know what they're talking about. I may not be one of them. I don't flash. I've just built my trading style, Uraj. So you've got to develop your own style. That's the case. I'm not here to tell you, hey, invest in this, invest in this. I'm here to give you my ideas about what I'm currently doing. I'm a tech investor. So when people ask me about Alcoa or McDonald's and stuff like that, I'll take a look at it. I'm not super excited about it. We are currently in a bubble, an AI bubble. Doesn't mean you can't make money off of it. Devon Energy, man, just wrong. $60 stock in my mind. got you out with another loss. So, yeah, this one's tough. This one, and all the energy stuff's tough, tough going. My energy stuff is down. Warren Buffett, by the way, is single-handedly keeping Occidental Petroleum afloat at about $58. I mean, let's look at the insider trades. I don't know. Can you see? Yeah, you guys can see this. Look, March 11th, March 12th, 15th, 16th, 17th, 18th. 70 million, 36 million, 94 million, 58 million, 21 million, 46 million. Uraj, if you had one question to ask Warren Buffett, it would not be what's your cash flow. And let's look at the seasonality. Let's bring this back. We're going to bring this back to 1980. Good number. Look, you're heading into a month with 44%. Yeah. Not a great month. So, for Occidental. For oil overall, I think the summer's just slow. I think for energy per se, the winter is just a better, more volatile and higher gains, but it hasn't been that great overall. I mean, let's be honest, energy here. I'll bring this up. We'll look at a weekly. Energy looks like it's a fantastic trade, doesn't it? Not really. I mean, look. If you invested in XLE in 2014, you're still not where you were. I mean, that's what, 10 years ago? If you invested 10 years ago, let's see, let's bring it back here. 10 years ago, you were at 78. You've made no money. Absolutely no money in XLE. So, energy got crazy cheap. And then it got crazy expensive in a hurry just to come up to where we are now. So energy just has not been a good trade. But I have to look up NGL. Willie asked me to look up NGL. I think their earnings are today. Let's see. NGL. May 31st in post-market, I think. Yep, post-market. Let's look at NGL. Absolutely, you can make money off of a down market. It's just about, I give you guys the inverse ETFs. You can sell covered calls, collect premium. There are plenty of strategies out there, Uraj. I was not, I lost, I think it was about 20%, somewhere in that neighborhood. I mean, Apple was down, which is a large portion of my portfolio. And I held on, portfolio overwise. You can't make money every year unless you're absolutely, if you pay a hedge fund, yeah, they're making money every year. They're at least trying, or they're losing less money than the S&P. If your money manager is not beating the S&P, don't pay him. I mean, there are plenty of hedge funds out there that if they don't beat the S&P, they won't charge you a dime. If they beat the S&P, they will charge you 2%. And then if they make money, they will take 20% of that profit. So, but there are absolutely ways to make money. Energy was up 60% last year. If you had been just, Nostradamus or somebody that could tell the future, change from tech to energy, and you made 60% last year. If you, stayed in tech, tax. That's why I tell people taxes. Taxes are so important. I can't sell out of my entire portfolio. In retirement funds, you can absolutely make money and save your money by managing your risk accordingly. I just don't know anybody that last year, there were quite a few people that were big on the energy trade that actually wound up making a profit last year, a very large profit. But there were a lot of hedge funds and a lot of money managers who lost money. So let's see. They're losing $61 million. They are up 157% year to date. February upgrade from UBS, $2 to $3. You're trading $3.12. Average target price is $2.50. Look at this, though. I mean, everybody was buying. Even this guy's buying at $279, but it's only $200,000. The other guy, the CEO, bought $3 million worth, which, by the way, $3 million for that guy. He's only managing a $400 million business. $3 million is a good chunk of change for a CEO managing a $400 million business. And look, here's the thing. He's been buying. November, he bought $2 million. I mean, he's doubled his money. So $2 million there is now $5 million. $2 million there is now $5 million. That's, from November to today. I'll wait for Willie's overview to do that one. Larry! But Uraj, I will tell you, day trading is not the way to manage a good portfolio. Typically, I have about 90 to 95% of my actual assets invested. I am 100% invested in the market, other than obviously my house, my car, things of that sort. But I don't have real estate investments, which are tremendously tax beneficial. And I probably should, but I don't want to manage it. So I have it in the market. I am 90 to 95% invested. So when I go in and I buy, $10,000 of NVIDIA, when I buy $20,000 of NVIDIA, that's the percentage that I'm not invested, that I'm looking to invest in. And I will wind up taking profits or taking losses on other things in order to keep my cash on hand efficient. And that's in my brokerage account. Retirement account, I don't feel like I need to buy things as quickly in my retirement account because typically I want things invested long term. So I'm less likely to trade in my retirement account. But it's just a system, Uraj, and you got to figure out something that you're comfortable with. I am going to put out a PDF of kind of my thoughts on some stuff, and I'll probably charge some money for it. It's about how I learned about stuff and things of that sort. It'll include links to YouTube videos to watch. It'll include some stories about stuff. How I invested in oil. For the first time, I went into energy in April of 2020, and I traded UCO. And UCO lost like 80%. I lost close to six figures on that one. Let's look at SPY. And let's look at the weekly on SPY. I'm going to start out with that. See how we broke above that 420? This week's candle, its high is 422. So if it's at 420.18, we're going to open up at 418. We could not hold. QQQ on the weekly. Let's see. I'm going to put that in. SPY could not hold 420. QQQ on the weekly. 350 was our swing. Could not hold 350. Could not hold 350. And as I closed at 13,017, I think. What was my target last week? 12,600. Okay, so it's at 13,000. NASDAQ is above 12,600. I'm putting my notes in order. Boom, boom, boom. AI went crazy. PayPal is still a good stock. KOLD way up with natural gas. PXD, CVX. The one I do want to look at is SMCI. This was the one with NVIDIA. Got thrown in there. SMCI is down 3% at 226. This is the one that buying at 105, you'd be double your money. It's got a gap after the NVIDIA earnings from 169 to 191. It continues on its climb. It has not lost, but the RSI is at 88. So this is the one that everybody asked me about. To climb. Snow popped at 1 AVGO. Willie on Instagram. Charlie from LLS. Tesla. Coke under 60. Microsoft gets upgrade. Bernstein moves Amazon to 140. Year-to-date S&P winners. Okay. Advanced Auto Parts. Mark Mahaney. ChatGPT sent out this week's include inverse ETFs. Okay. I am going to start the podcast. If you guys are here, please hit the thumbs up button. And make sure you're subscribed. I'd love for you to subscribe. I am here every morning. The charts that you see on screen are TrendSpider. It's my algorithm. So 4-hour algorithm. You can see here the buy at 105. Really good buy. You can see a couple of these exits where it was losses, but 20%, 4%, 52% gains. I'd deal with those losses if I could get those gains and sleep at night. Cleveland Cliffs should have gotten out on this one. Didn't get out. Twice it told me to get out. Didn't get out. Oh, well, I'm looking to buy more, but Uraj, this is where I'm talking about with confirmation. I have not bought again, even though I had several opportunities to, because I just don't like the candle action in this one. So I'm being patient, but it doesn't feel good to be patient because I'm losing money. But I'm holding for 1 year. So I've lost money on this one. I bought up here, I think about $19, somewhere in this neighborhood. It's got a gap at 1877 to 1901. I believe we are heading back up there. When energy and commodities are in a good place, the economy right now is not in a good position. So, okay, let's get started on this. But again, if you're here, hit that thumbs up button. Make sure you're subscribed. If you have any questions, there's a link tree down below in the description. Sign up for a private Facebook group, which is where I communicate with people. I am starting a newsletter. I'll probably start today, first time. So you can subscribe to that on the link tree. There's places where you can give me a tip. I don't charge for any of this. I'm not one of these guys who's looking to make money. I am not selling courses. If you have a question, simply ask it. It's a very friendly group. But here we go. I'm going to get started now. Good morning. It's hump day. Humpity hump, 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 hump. It is Wednesday, May 31st, the last day in May. You know what they say? Sell in May and go away. And we're looking at a down day. You had the debt ceiling pass the Rules Committee last night. You had basically, I think, again, I went over it yesterday. I think if you can continue this bipartisanship, I think the middle starts to take over from the crazy right and the crazy left. I don't care who you support, Republicans or Democrats. Just don't be the crazy right or the crazy left. And if you are, open up your mind to the fact that maybe a candidate who is more middle of the road might be better. And you know what might be better for our long-term government survival? Term limits. High five for any candidate that gets in there and introduces a term limit bill. Mitch McConnell, too old. Joe Biden, too old. Kevin McCarthy, too old. Get some younger folks in there. And if you haven't seen it, there is a fantastic AOC parody account on there. Now, AOC, from a gentleman's perspective, she's a Senate 12. Name somebody else. But she's an absolute Senate 12. I love her enthusiasm. Do I agree with her policies? No. But I love her enthusiasm. She deserves to be in there for 2 years. Get her out. Bernie Sanders deserves to be in there for 2 years. Get him out. Chuck Schumer deserves to be in there for 2 years. Get him out. Matt Gaetz doesn't even deserve to be there for 2 years. Guy does sex trafficking. Speaking of sex trafficking, if you haven't seen it, Jamie Dimon probably lied in court under oath that he never had a discussion about Jeffrey Epstein. The guy's your biggest freaking client, and you as CEO never discussed him? What a douche. That is why I will not invest in JP Morgan. So I just, listen, he can say what he wants to say. He is one of your biggest clients, and you don't have a discussion about him? Whatever. Let's talk about SPY. SPY couldn't hold the 420. We are looking to open up at 418. Yesterday's morning candle opened at 422, above that 420. Low was 419. High was 422.58. So we didn't go very much higher over that open. It was a minus 0.62, period. The second part of the day, we wound up. You opened up at 419. You closed at 420.17. So you held it. Today is key. If you don't hold 420 on SPY, I think we've started to turn this upward market into a little bit of a down. Now, there's two reasons why I think that. Sell in May and go away. That is a strategy that has worked out for many, many people, where you just get rid of stocks. You don't think about it. You kind of maybe keep your winners, but you do sell in May and you go away. It's worked. Hasn't really worked out for most people, but I think, large traders, it has worked out for you. You can see right here, we hit 420 right here back in February. We hit 420 back here in August. This is the weekly SPY. We haven't broken down completely. You're still above that 9-day, so you still have confirmation. The question is, where do we end the week? Today, the debt bill goes into a vote. It will happen probably tonight. You will hear crazy things from both sides. The hope is that the middle is actually, common sense. Listen, the reality is we're spending too much money. The reality is that this bill pulls it back in a record fashion. It might not be what everybody wants, but both crazy sides are going to say no. If your elected official, here's my thing to you. If your elected official votes no on this today, it's part of the problem rather than being part of the solution, because if your official would rather us go into default, he does not have your best interest at heart. Doesn't matter that he doesn't think that we're not cutting spending enough. Doesn't matter that he wants more limits on pay for work on the welfare programs. Doesn't matter that he says, hey, Social Security needs to be changed, or Medicare needs to be changed. Doesn't matter that he says, I will protect you. No, he's not protecting you. If he or she votes no, get him out. Get him out. So that's I'm off my soapbox. But SPY here, if it doesn't hold 420 this week, we're still not confirming that we're in an upward market. It's an extended rally. So I think if you pull back, you're probably pulling back to 400 on SPY. QQQ, same kind of thing. It couldn't hold the 350. We closed at 349.96, I think. Or, we're trading at 348.12. You closed at 349. Couldn't hold that 350. If we look at the weekly on this one, the 350 is the mark that you want to hold. If we hold that, we still have confirmation. Now, you have confirmation all the way down to 335. So I do think that you have that, but that 350 is going to be key to push up here to 370. That's my thought. So there's a couple of catalysts here. The first catalyst is the debt ceiling. And if we get a vote on that, you'll probably see short-term bond rates go down. I think they were down this morning, closer to 5%. You will see that go down because risk of not paying bonds in the 1 month, 3 month, that's off the table. So the government isn't going to pay a shit ton of money like they were for bonds. Now, if you bought bonds, the bonds are probably worth more and you can probably sell them for a pretty good gain. Maybe not a whole lot more, but good running bet on that one. Fixed income, again, it's kind of once in a lifetime where it's actually good again. But the inflation number comes out on Friday. That is our second catalyst. Second catalyst is the May inflation number. If it's running hot, meaning inflation is still up, that could be a catalyst to pull the market back. Remember, the market has a pause for the Fed priced in. You saw a Fed governor of Cleveland yesterday, Messner. She said she doesn't think it's time to pause. She has been one of the dovish ones, one of the ones who has said, hey, maybe we want to pause. She now has turned into a complete hawk and has said, hey, we may not want to pause. So something to think about. Again, overall, from a big picture, that's kind of the way I look at it. And I was just kind of on YouTube saying I'm not a huge day trader. Sometimes I'll trade these triple levered ETFs every now and then just to play around, but I'm not a guy that's making money on day trading. The large majority of my money is swing trades. Or long-term investing. Now, I make no mistake, I have made my money in long-term investing, buy and hold. So, AI. Since we're in this bubble, let's talk about AI and the symbol AI. Remember AI, and I think I brought it up yesterday. I said, hey, in the algorithm, it was 1843. I know for a fact on May 1st I brought this up. The down here where you see this gap right here, this was where Hindenburg Research came out and said this company is a complete scam. They were in Bitcoin and kind of the ledger stuff, and then they turned to an AI company. And once they turned away from blockchain into an AI company, they just changed. The CEO just kind of became a blah, 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 whatever. If you've seen him talk, I don't like him. I don't think he knows what he's talking about. But C3 AI, there was some news about C3 AI's being available on the Amazon App Store or something like that. I don't know the news, but it went crazy yesterday. You got above 40. So if you got in at 18, 20, whatever you got in at, take your profits. We are in an AI bubble. They have earnings coming out today post-market. I would not expect this to be something huge. I would expect this to pull back here. You've covered this gap. You've got a gap down here between 19 and 20. If we are to pull back, I think you're losing 50%. Take your profits. I could be wrong. Remember, rule number 1 is don't listen to a douche on the internet. Rule number 2, Jim Cramer is always wrong. So I just wanted to make sure that you guys know that we're in a bubble. If you go back to, let's look at SPY. Back in the 1996 era. We'll look at a monthly because I want to show you what a quote-unquote bubble looks like. So if we pull this back and we go back to 1996, this was kind of the beginning of the internet bubble. And so right here at about 50, say January 1996, you really started to see kind of the internet pull up. This was Clinton's second term. So he had just gotten reelected. They started with the Republican House working with Newt Gingrich, And you see it pulled back a little bit here in 98. There was something that happened. I don't exactly know what. Maybe that was the Monica Lewinsky thing. Who knows? Maybe it was the impeachment. I don't know. I don't remember. I do remember in March of 2000, everybody saying we're in a bubble. Be careful. We're in a bubble. And they were saying that all the way from 98. Doesn't mean that this won't continue higher. But in 2000, they said we're absolutely in a bubble. And it started to turn over. And you started to see high PE stocks where the companies weren't making money. They just had clicks for users. That was it. They started to go out of business. And they started to really pull out. Look at Cisco. Cisco was building the internet back then. And I'll pull up that chart later. But at this point, it started to go down. Then you had 9/11, and things just really went down and ramped down at that point. 2003, you really started to pull up. But if you bought during this bubble in 2000 and you were there and in the market at the top of that, it took you all the way to 2007 to actually get back to even. 7 years to get back to even. 7 years. And then what happened? Oh, the housing crisis. So you didn't really even get back, because if you held on, let's be honest, if you held on through this, you're going to hold on through this. You ain't going to sell out, because you know what? I'm just back to even. Maybe you even bought more. Well, it took you until 2012 to get back to even. So from 2000 to 2012, lost decade. Absolute lost decade. Now, if you held in, obviously, and you bought at 145 23 years ago, you've quadrupled your money, but doesn't feel good to sit down through there. So as you're in this AI bubble, and I say that because AI is reporting earnings, and AI, just to be clear, has a, let's see, $4.25 billion market cap. They are losing $262 million. They have tons of cash on hand, $7.90, say $8 per share. They have 110 million shares out there. So they've got plenty of cash on hand. They're not going out of business. Year to date, it's up 292%. It is a high flyer. The average target price is right back there where I said that gap is, 1970. So my guess is you will absolutely at some point lose 50% on this. Take your profits. Be happy with gains. That's my guide there. PayPal. I said PayPal at 60, still a good buy. You're at 62. PayPal has had that button hook. $60.84 is where the algorithm got you in. You're at 62.29. You're seeing the MACD point upwards. The RSI is at 47. The RSI is sliding a little bit more than I would like. I think people are starting to get in there. But I do think you see this gap between 70 and 75 get filled. Buy it. I think you'll be fine in that one. KOLD. This one, natural gas had a pump downward yesterday. And KOLD was way up. You're down 6%. So Boyle is your play today, but it's up. I still would not be assuming that Boyle is the play. Boyle got you out with a 3% loss in this one. You had plenty of time to take that gain up here at about 374 or 360 or anywhere over that week. You're down at 283. You were trading at $2.83. That's up 6% today. I think you closed at like 260 something. So that's one. UCL oil, the crude, it is under $70. UCO is down 1.84% in the market today. SCO is up 2%. SCO just got a cross up at 27.76. You're at 27.97. If you think oil is going to continue down, SCO is your play. And speaking of oil, we have one of my personal favorites that I think is great. It is going to ex-dividend date today. PXD, it is over 201. It was just trading under 200, but it is at 201. The algorithm has you out, but remember, you have to buy this today to get the dividend. Each share that you buy today, you will be paid on June 21st. You will be paid $3.34. extra, special, participating, or arrears, $3.34. So you will be paid $3.30. I think it's actually, you might be paid $6.60 some cents. You will be paid whatever you get paid. The $3.34 represents 1.67. If you look at PXD and you look at this, I think you might be getting both those 334. PXD has an 11% dividend. Your boy here is in at 208. I may buy a bunch more to get that dividend. The dividend will be taken out tomorrow. Oil down low with PXD under 200. Remember, Exxon is rumored to want to buy these guys, and the average target price is 252. Be a great move if you got to 252. I think oil will probably be a later year recovery play. I think right now oil is going down because everybody thinks that we're heading into a recession. The parts of the market other than AI are not doing well. So take a look at this. This is a Seeking Alpha chart. And I think I posted some of this. No, I may not have posted this, but I wanted to show you over 1 month what some sectors are doing. So QQQ over 1 month is up 8.57%. So if you just bought at the beginning of May, you're up almost 9%. If you bought SPY, you're not even up 1%. It's 0.91. So the overall market looking pretty good, but you're not up 1%. If you invested in tech, you're good. If you invested in energy, XLE, the beginning of the month, you're down 8%. If you invested in utilities, you're down 7%. XLP, what is XLP? Let me see. I think that's consumer staples. I knew it was consumers. XLP is down 4%. So consumer staples, 4%. If you invested in XLK, you're up 9%. Look at those routes. So at some point, you know, year to date, you can see year to date, it kind of covers the same amount of same exact thing. It's not even coming up. It screwed me up. Oh, it should come up. Here, let me refresh. Nope. It messed up. But year to date, let's see. Is it going 1 month again? It's just doing QQQ now. But yeah, I wanted to show you that. I'll recreate it and I'll post it in the private Facebook group. Maybe I'll post it on the newsletter. But I wanted to show you that. If you don't like PXD, well, think about it. PXD is not a Dow. It's not a NASDAQ stock. It's not in any of the indices. You know what it is? CVX. Chevron just got an upgrade. Gets upgraded by JP Morgan with a 173 price target, trading at 151. So if we go CVX, you can read about it. I'm sure there's articles about it. The average target price for CVX, Chevron Corporation, is 188. You're down 14%. There is your upgrade from JP Morgan. They moved it to 170. On May 23rd, HSBC have them at 189. UBS in April said, hey, it's $212. At some point, and you can see the lead one from Barron's, why shares are falling anyway. Oil's just going down. I mean, energies just has, it has no legs right now, but I think you're fine if you invest in it from now until the end of the year. SMCI. This is a stock this is super microcomputers. It is a super tiny capped market cap. It is $11 billion, income of $587 million. They are making money. It's up 185% this year. It got this gap between 166 and 190 on the day that NVIDIA reported crazy earnings. You've got that gap. You've also got a gap down here between 112 and 105. If you're in this one, I'm seeing the button hook happen. It is down 4% to 224. The RSI, 78. It's coming off of a 91 RSI. The MACD is just extended. You're seeing the volume kind of spikes here. It looks like after its earnings, it just kind of gapped up there. You've got gaps here. I would say I continue to get people writing to me about this one. It is a hype play. If you know something else about it, kudos to you. I haven't researched it. I just know anything that moves like this, it's hype. Take your profits if you're there. You can absolutely trade it, but take your profits if you're there. Snowflake popped off the 148 price point. It's at 162. It's up another 2% today. Remember how I said it was going to pop off that previous one at 148 and 144, 145? Probably was a good buy for this one. It's up above its 200-day again. It's at 162. It's going to cover this gap to 175. Snowflake, I think it's a good one. Palantir is the other one that has been going nuts. Palantir is down 3%. I'm starting to see the button hook on this one, but I hate to say it's over because I do think that this is a $20 stock at some point. I'm going to remove this annotation and I'll pull this back. You're going to see from a long-term perspective, Palantir went all the way up to 30 or something. Let's see, it covered this gap up here to 1379. Let's take a look at a weekly on this one. And I don't think you don't have a 200-day yet on the weekly. But this is at 27. This up here, this was 45. This is Palantir on IPO. And so it's coming. Companies with good management, good products with good earnings, they do well. And this one, if it's going to be, they said by the end of the year, they should be cash flow positive. I don't think that is right now. But no mistake about it, Snowflake is not cash flow positive, and they are even more expensive than Palantir. Palantir lost $255 million in their last quarter. So if they make it up that quickly, that's just crazy, crazy good. Broadcom. Let's talk about Broadcom. This went through some crazy trading yesterday. It went up to $900. Look at that candle right there. Its high, $921.78. Its earnings tomorrow post-market. It's got this gap right here between 730 and 740. I think you're coming back down to it. It's at 808. It is. It's up. God, man, this one has just been going nuts. It opened up at 794. It went up to 818. You're trading at 810 right now. It's got momentum. It's got crazy trading that's going on. I just think this is part of the, hey, stuff is broken right now. Traders are looking for opportunities, and they're going into these things like crazy. Broadcom was the day after NVIDIA. Simple as that. Check out Wall Street Bets. Check out some of the retail stuff. That seems to be what's going on. But AVGO, great company, very expensive at these prices, but they do have earnings coming up. And remember, they just went into a billion-dollar, multi-billion-dollar deal with Apple. So it's significantly more than just Apple, but that's kind of where they're at. Willie on Instagram, he says, could NGL Energy tomorrow's forecast, can it run if they have good earnings? NGL, let's look at NGL. NGL is a small cap energy player, NGL Energy Partners. I think Willie's been in this one for a while. And Willie, if you got into this one in the dollar range, I mean, kudos to you. It's trading at $3.09. It is got its earnings tomorrow. The algorithm has had you in and out of this one. If you've traded just on the 4-hour algorithm on this, you've made over 2 years 67%. If you bought and held this one, you've made 9%. Your average win is 33%. The algorithm has you in at 282. Could be crazy on earnings. I haven't seen good reaction. I mean, look at this. Here's the earnings back in June of last year. Didn't perform well. Here's the earnings in August of last year. Didn't perform well. Here's the earnings in November. Didn't perform well. The earnings in February performed really well. They made 19 cents per share. So they went from losing 21 cents a share to making 19% cents per share. Now let's go over to FinViz and we'll type in NGL. Oh, why did I do MGL? NGL. BINGO. It's a $401 million company, market cap. It lost 61 million. The 19 cents per share is probably adjusted GAAP kind of stuff. Actual earnings, they lost 61 million. It's got no dividend. It is an energy company with no dividend. Their earnings per share next year expected to go up 220%. The forward PE is 9.75. So it is rather expensive. The target price is $2.50. Now, in February, UBS upgraded them with a $2 to $3 price target. You're trading at $3.08 right now. Willie, I think it's extended. I would say that when you look at it, again, this should have been clear. The CEO of a $410 million, this guy's putting in almost $9 million. $9 million over the course of 4 months. Now that's turned into like $18 million. So the guy is a freaking genius. He's the CEO of this company. There's only one reason they're doing that kind of stuff, and it's because the company is undervalued. He's putting a lot of money into it. You know who else put money into it? Capri. Capri Holdings, we talked about this one, where the CEO just bought $10 million worth in March. And they have earnings. Let's see, Capri. I brought it up yesterday. But the completely different industry. But Capri had earnings. They made 97 cents. Oh, it wasn't a good bet. They're down 6%. Ooh, your boy was wrong. Ugh, but yeah. So you can't always count on that stuff. But I did want to bring up with Willie. I think it's NGL is extended. That's just my personal opinion. I have this feeling that for some reason, $3 is just an extended. Look, I don't think you're getting back to the 200-day, which would be a $3 and $4. And I don't think that it's going to, energy has not been good. NGL, let me see. What do they deal with? What part of energy? They are a oil and gas. So, transportation, storage, blending, and market of crude oil, natural gas liquids, refined products, renewables, and water solutions. So water solutions, crude oil, logistics, and liquids. I'm not in this industry. I don't play with it. I typically do the big guys with oil and stuff. So NGL, Willie, I might get out to that one. My buddy Charlie pointed out to me yesterday and sent me a little news article. The debt ceiling agreement would end student loan payments. What does that mean? Well, SOFI. SOFI is the largest processor of student loan payments. They have the largest student loans on debt. This is a bank. This is a loaner. It's a new age kind of fintech. It's up 13% today. He sent this to me last night when it was trading about $5. It is now at $6.81. SOFI is the single biggest beneficiary of that deal going through. The RSI is at 80. I don't know where this one would go, but I do know that it has been, come on. I can't type today. SOFI, it is forward PE of 502. They lost $284 million last quarter. All they have to do is show, again, it's super, super expensive. But if they start getting those student loan payments again, you'll see this go back to $8. No doubt in my mind, you're seeing it go back to $8. Year to date, it's up 38%. They have 103 cash per share, $2.91. They have 920. They have billions of dollars of cash on hand. So this is not going anywhere. The average target price is $7.23. You're trading at $6.80 right now. $6.80. You closed at like $5 yesterday. So, but thanks to Charlie for pointing that one out. Tesla. TrendSpider posted yesterday. June has been a very weak, kind month. I should say kind month to Tesla over the last decade. Here's the seasonality for Tesla. And if we go back to 2010, you can see June is 75% of the time. It's a winner. But 80% over the last decade win rate and an average return of 10.14%. If you want to invest in Tesla, it's at 201, $259. I've said anything under 200, you buy it. Anything over 200, I think if it dips down below 200 today, you buy it, hold it for a month. Maybe you make $20 per share as it goes to cover this gap up to 257 to 261. Maybe we get that kind of gap. Elon Musk is in China. He is making friends with all the Chinese folks. He is a legend in China. The Chinese Communist Party may hate America, but the freaking Chinese people love Elon. So, Coke, if you're looking for something to buy and hold, Coke is under 60 again. 59.52 right now. You're in this ascending triangle. I've told you, hey, you're outside of it. You broke down quick. I mean, it broke down really, really fast. Under 60, I just continue to add to it. I don't sell a lot of this. I do sell some of it, but I just continue to add to it. It's got a decent dividend. I mean, it's nothing compared to a bond rate at this point, but it's 3.08%. You're down 6% year to date. But Coke is in my long-term portfolio, and it's under 60. Microsoft got an upgrade. Microsoft is one of the top. It is my weekly stock picks. Let's see, who did get an upgrade from? I don't have that in my notes. But if we go over to FinViz, you can see April 26th. I guess it hasn't made in there. The average target price is $334. You're trading right at $334. You're right at 52-week highs. 52-week highs, $335, and you're trading at $335.42. So it is the weekly stock picker. Amazon. Bernstein says that Amazon goes to 140. It's at 121. It's slightly down today. You're kind of seeing the button hook there. If you think we're going to continue, if you think there's a significant upside to this one, which I do, I've been buying under 200. If you look at the weekly, you can see we're under the 200-day, and Amazon has not been under the 200-day, I think, since it started really going into e-commerce. But look, I mean, even COVID, it didn't hit 200-day, and you're under the 200-day now. They have a cost problem, not a demand problem. So Amazon, I just ordered mason jars for my overnight oats off of Amazon. Best price. Year-to-date winners. Year-to-date winners so far from the S&P. NVIDIA up 170%. We talked about this one. Meta up 117%. AMD up 90%. CRM, which is Salesforce, 66%. And Royal Caribbean, this one shocked me. Up 62% year to date. 62%. You can see the dip down there at 49. It's at 80 right now. Royal Caribbean. That one shocked me. That's why I brought it up. Advanced Auto Parts reported today. I want to basically point this out as an example of an absolute 100% bubble. If you go back to the October highs, remember, October, for the majority of the market, was what was considered the lows. This is close to the highs. I mean, you go back to last year. Let's move this back to, we'll go to a weekly. You go back here, January of last year. Yeah, it came down. Then you had kind of this bump up here. Hey, this is all used cars. Cars are going well. Then you had January. You went up to $230 a share. $230 a share. Pre-pandemic, you were trading at 158, 160. You're at $76 right now. 76. It is down 31%. This is 100% a bubble. They missed on earnings. Huge. They also cut the dividend by 40%. Do not get into Advanced Auto Parts. I always say any reaction in the market is an overreaction. This is just a bad stock. Poorly run, poor management, poor decisions. They got priced out of the market on a lot of things, and they just did things wrong. Yeah. Ignore it. There was a guy, Mark Mahoney from Evercore, gave 3 stocks that he likes, and I like them too. Meta, he's got a $350 price target on. I said, get this close to 240. I wish I would have gotten it. I thought it was going to be 230. This is just a great stock here. And the reason it's a great stock and his target is 350 is because look at where 350 is. That's where it was when it was actually making money and not focused on spending $10 billion a quarter on the metaverse. So you've had this turnaround and it has confirmation. If you think it's going to 350 again, just buy it. Just buy it. It's just one of those stocks. Just buy it. Go into it slowly. But I think 260, I've been waiting for 240 for a long time. Uber, I said anything under 40, you can buy it. I put my price target at 30. It never got there. The actual algorithm said get in at 32. Today's candle, you're out with a 17% gain. But I don't think that's a crazy thing to still be in it because you've got a green candle. If you think the debt ceiling is going to get concluded, American Airlines just upgraded their guidance by like 50%. They're up today. I won't cover that one. But Uber, I just think if they make GAAP earnings later this year, they will buy back a significant amount of stock. Mark Mahoney's price target on this is 75. I tend to agree. Uber is a great long-term play. And he put Amazon on that list. And we talked about Amazon just before. It's been underperforming. And Amazon, in my mind, again, his price target is 150. I think you're looking at 140 minimum. I added up down below 100. They have a cost problem, not a demand problem. So Amazon, I think, is a good one. I did post, and ChatGPT, those traders, they posted this week's portfolio yesterday. It is out there. It's a short week. Look at it what you want. They're doing pretty well. Let's talk about scans. XLY, which is the one that I own a large amount of. Consumer discretionary. I've owned it because I thought it was going to be really good this year, and I recommended it down here at 128. And I said for the year, I think this was going to outperform. It has a secondary cross up here at 151. I don't know that I necessarily get into it. You're seeing it cross up above that rising wedge. I think you could continue. I would probably just wait. My guess is you can get this at 149 if you want to get in there, but I don't think 151 is horrible. These spider sectors, you basically buy and hold for a long time. Boeing has a cross up. Boeing is down 1% today. It had a cross up here at 204.65. Get it for under 200. It's at 201 right now. Just get it under 200. Buy it and hold it. I hold it just under 200. SPG, at some point, by the way, Boeing will bring back the dividend. And when they bring back the dividend, that's a $300 stock. SPG, Simon Property Group, has a cross up here at 103. I loved it at 120. I love it even more at 103. This is one that gives you a great dividend. Let's see. Simon Property Group is a 5 or 7%, 7.15. It is down 11% this year. Good companies with good products, with good earnings and good management will make you money. This one's going back to 120. So at 104, you can sit there and wait for it to go back to 120, 7.15. The problem is if the consumer is weakening, if the economy is weakening, that's going to hurt, but you get a 7 point, and he's not going to cut that dividend. mRNA had a cross up. 128, this has been one that's just been floundering. You're seeing capitulation right here in the 120s. They have no catalyst other than maybe China says, you know what, we're going to license that mRNA vaccine. Remember, the CEO is selling like $6 million of shares each day. Doesn't look good. DRN, which is a triple levered bull on the real estate market. The real estate market has been hit. Home builders have been doing really well. $8.18. You're trading at 8.07. This has been a dying trade. DRN has been the trade. You'll see DRV, which is the bear 3 times levered, has been the winner of late. Not too much. I mean, the entry was $50.10. You're up 10%. You were up here closer to 60. But DRN finally, maybe it's DRN's time to shine on this one. SVXY. I would not buy SVXY right now. It has been a complete winner. It's a secondary cross-up. The problem is The VIX right now is at 17. How low do you think that VIX is going to go? I think we're going to have volatility in June. Do not buy SVIXY, but it did get a secondary cross up. VOT, VNQ, those are the two Vanguards one that got cross ups. XLC, which is the communication sector. We're going into spider sectors now. XLC had a cross up, a secondary cross up, 59 to 83. This one has been doing really, really well in May. XLC. XLRE. You talk about DRN having a cross up. XLRE, if you just want to take a long-term play, 35.81. Here, let's take a look at a weekly of this one because I do think there's an opportunity here. You're under the 200-day. Real estate has just been getting killed of recently. But check what's in XLRE. A chip company that I've said, hey, buy under 30 and you can sell it over 30. It's at $30.29 right now. The algorithm says buy at $29.88. You're just above that 200. Listen, chips, NVIDIA and AMD. In my mind, I think those are the two. Last week, we went over Palo Alto Networks. I own that one, PanW. Zscaler. Their earnings are coming up June 1st, so tomorrow in post-market, I believe. Yes, Zscaler. Had a secondary cross up. The initial cross up was $89. It is at $134 right now. That was just on May 5th. So you've covered this gap. The only gap that's left to fill is up at 141. That's a big ask for this current kind of climb up, but it's because CrowdStrike and Palo Alto Networks and Fortinet have had such good earnings. And they've been doing so well. And you look at Zscaler, and it has just been beaten down. If we look at the weekly here, and you could have gotten it here in the 89.90, and then you're back at 134. You just started your 200-day, which is still turning positive. You had the death cross there, and it came down. But you're almost back to your 200-day at 158. Your all-time high on this one, which was back in November 2021, 373. So it is a company that is not making money. Let's go into FinViz and look, and we'll show you. Zscaler is losing $324 million. If they announce a slowdown in those, or if they even kind of, for some reason, turn it around and maybe even come close to even, the PE is 67. It is super expensive. The market cap is $18 billion. So far this year, you're up 20%. But that's your final scan. Let's talk about the sponsors. If you're paying anything more than $25 a month for your cell phone service, there is a link down below for Visible. It will save you $20 off your first month. That means your first month is $5. Test out the speed. Everybody that I've done it with that has Verizon, you actually wind up getting better speed off of this $25. And if you don't like the $25, they have the ultra fast $35. It's only $10 more. That gets you the 5G ultra wideband, where you're blazing. I was with somebody with T-Mobile the other day, and she was just blazing speed. But I think that's the ultra wideband one. I don't personally need it. You know what? Your boy's saving $10 a month. I don't do a lot of videos outside of the home. I don't do a lot of streaming, quote unquote, outside of the home, other than podcasts. And podcasts are easy, man. You just need 4G for that one. That's the first one. Second sponsor is TrendSpider. I am sending out a PDF to anybody that signed up for TrendSpider. You get access to my 4-hour algorithm. You get access to my 65-minute algorithm that was developed by David at TrendSpider. I give you all my watch lists, the core portfolio, the energy names that we trade, the levered ETFs, both up and down, that we trade, list, spider sectors, all of that stuff I give you, plus daily scanners. You can look for 65-minute scanners. You can look for 4-hour scanners, whatever you want to look at. It's all there. So click on the link below. DSP25 saves you 25%. If there's a sale outside of that, you actually save more. As long as you sign up with that link, I will absolutely give you the PDF. So if you have any questions, hit me up in the private Facebook group. The link tree is down below. You'll see it in the icons there. If you want to sign up for the newsletter that is starting soon, maybe today, if I can figure it out. Hopefully you guys will know. But that is down below as well. I put the link in the private Facebook group. If you have any questions, the socials are below. Join our private Facebook group. It's a great community where you can kind of look at. But again, thanks for tuning in. I will be back tomorrow. We will see what the debt ceiling holds for us. So, okay, take care. Have a great hump day. Boo, 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 boo. Morning, Brandon. Wow. Sell in May and go away. VRO, you can't do any worse than the current governor of Texas. But Texas has huge listen, you have so many challenges in Texas. And at 20, man, get involved. You know, fucking Obama became president after he was a community organizer. And 20 is not too soon to start. Just better hope your social media is pretty cleaned up. Morning, William. TLT I don't like. And let me show you why I don't like TLT. I think it pays a dividend as a bond fund, if I'm not mistaken. 2.8%. You're up 2% this year. And you basically stay in a trading range. Here's the way I look at TLT. They constantly revolve 20-year treasuries. So every day they're buying 20-year treasuries. What do you want that for? I mean, yeah, you can make money on it, but let's take a look at a weekly. I mean, why would you want for years? And it doesn't have enough volatility to trade. But, you got up to its high here at 170 in April 2020. This was when, COVID was going on. TLT went up because people thought, oh, I need a bond fund. Ever since then, it's been nothing. I mean, you got down here to 94 and you're at 102. Again, in my mind, William, buy something that has a good products that makes money. TLT, in my mind, it's just not something that I think, let's pull it back here and we'll see. There are still people holding. The majority of people are down here between 108 and 104. And this is just since COVID, March of 2020. So most people are holding down here. So you can see a lot of people got out, but there's a shit ton of people who are still holding up here. And am I holding on for a 2% dividend every year? There's better ways to make money. And I just never liked TLT. I'd rather see you buy a 20-year bond today that is paying 3.4%. I mean, let's see. Hold on. Let's go to Fidelity. And let's news and research. Fixed income bonds. Let's look at this. Yeah, U.S. Treasury. 20-year, 4.08%. So if you're buying it, why wouldn't you just buy a 4.08% bond, U.S. Treasury bond? Because TLT you actually have to pay taxes on. Even if you want a corporate bond, I mean, look at the corporate one. 20 years paying with BBB 7.29%. I mean, the muni bonds are right at 4% as well. Without any kind of, taxable municipal is paying 5.3. So I never understood why you would want TLT. I think it's been a sucker's game. It takes fees. Just never liked it. Never liked it. You know who liked TLT? Tom liked TLT. He kept telling me, you're wrong, you're wrong, you're wrong. I wasn't wrong. I've never seen the benefit in it. But that's me. Again, don't listen to a douche on the internet. Let's go over here. Hopefully you got that one, William. Hopefully you're still here listening. Hit the thumbs up button, degenerates. Create an episode. I'm uploading now. 5:31. Maybe I should just I'll upload the podcast. We're gonna do P-Coat. P-Coat. I haven't done P-Coat in a while. Insert ad. We'll go over to YouTube. And we'll upload this one. Uh, 18 watching. Upload video. Select file. Upload. And then I'm going to go over to Canva. And let's do this. We'll just do this one again. Let's see. No, I don't want that. I want TIV. 31. And no. We're going to delete that. And we're going to share. Download. What bill? Which bill? Oh, the you mean the debt ceiling bill? No, I think. Let's see. copy. Oh, I've got to save episode. Brandon, you talking about the debt ceiling bill? I'm sorry. I can't think of more than one thing at once. I get all kinds of out of sorts. I think the debt ceiling bill gets voted on today. I think the crazies on both sides get to say their piece. And then I think we actually get a vote that is worthy of the middle and the majority of the United States. Let's see. Let's put this in. And we're going to publish now. We're going to put this in. Oh yeah, I did talk about it. Sorry, I don't mean. So here's my thought on it. I think it gets done. I think the middle. I think you're gonna hear a ton of complaints from the left and the right. There's nothing in there that limits companies to buy back stock. Nothing that I know of. Nothing that I've read over. There's already a rule that they tax them for anything over 1%. But I don't think there's anything special in this bill. There is the student loan stuff is done, which is hugely bullish for SOFI. So that's an enormous. And here, I'll bring you back to. I need to start posting. Home. Hold on one second. Yeah, the middle of the road is going to win on this one. It's not. Wow. You know, if I put buy now in my title, Spotify's telling me if I put buy now in my title, I get like 20% more listens. You people with your, I need a text service. So here, Brandon, look at SOFI. Now, you didn't know this. SOFI is a dying stock. I mean, it's done some really good things. And it popped, around the time when people were depositing money in there. It popped up from 535 up here. This was a good pop. It was down 13% during that time. But 495 was a great buy at this one. Nobody knew that the debt ceiling would include some type of student loan. When it started to get out there that it would, that's when it came up here. You're going to $8, so at $6.51, probably not a bad buy here. I see right about here as being a pretty good resistance level. I mean, if we just on this small chart, if you post, there's 3. And if I just go up to the top there, you're looking at $7.30 kind of thing. But yeah, it's popping. Hey, you can't win them all, man. You bought Palantir. That's the good one. I mean, look. Snowflake's up 4%. Remember how I said that earnings was just a reaction, was an overreaction? I mean, you're up at 160. I own it. I might buy here at 165, to be honest with you. Roblox is back up over 40. QCLN, I can't win. NVIDIA's coming back down to the 380 level. I'm still holding. Devon Oil's just getting destroyed. Bank of America is back under 28. So the economy's tough. The economy is just not in good shape right now. Other than AI. So, okay. I am out of here. I hope you guys subscribed. I don't think there was anything else that I needed to look at for you guys. EV Go. Still, that dude has the biggest, largest one. Okay. Christian, I love to hear that. I'll shoot you the PDF in 1 second. When I get off, I'll shoot it to you right now. I mean, this just makes me angry when Jamie Dimon says he never discussed Epstein's account. Staley says that he did. Staley, A, has nothing necessarily to lose. I think he wants to bring down Jamie Dimon. I don't think that they're friends anymore. And he's upset at how Dimon is making him take the fall for everything. But I also think, man, wow, look at Visa down 2%. Visa under 200, absolutely buy it. MasterCard under 350, absolutely buy it. Goldman Sachs, I'm waiting for Goldman Sachs under 300, but I don't know if I'll get there. Wells Fargo under 40 again. Home Depot, you're down 2%. Look at the specialty retailers. AAP, Advanced Auto Parts, down 31% today. GM's down 3%. They're a trash company. Tesla's under 200 again. Pick it up. Ford down 3% at 12.18. Energy's just getting destroyed. SLB, Schlumberger. That's one that I think, Schlumberger is, I'm going to put that on my list because it's beaten up unnecessarily. Look at how far you are away from the 200-day. Your ex-dividend date is coming up June 6th. If we go to SLB and we look at this one, your 52-week range, you're 41% above your 52-week low, which is 30. So you're not quite there. That's the October lows where you were at 30 down there. Your PE is 16, so it's a little bit expensive. Forward PE of 11. Your average target price is 64, and you're trading at 43. The most recent one was April, UBS, $48 to $66. January, Susquehanna, a $68 price target. Schlumberger will pay a larger dividend than last year at 25 cents. It's 2.26%. So, okay. I may get off here. Christian, I'll email you back right now with the PDF. Let me know if you have any questions. But yeah, I love TrendSpider. TrendSpider is just It's pretty freaking amazing. I mean, selfishly, I want you guys to sign up because you'll never get off of it. I mean, it's $400 a year. It's a bit expensive. Make sure you have enough capital in your trading account to justify it. Make sure that you're trading or monitoring your portfolio enough to justify it. But there's so many different strategies. Like yesterday, I posted in the Facebook group an Apple strategy that greatly outpaced buying and holding the stock. So that's what you're looking for is if you're unsure of the company and you don't want to buy and hold, you're looking for the thing that takes an emotion out of the trade and tells you, I need to get out of this. Brandon, Target, my friend Scott asked me yesterday when we were hiking. I'm not out of it. I am in it. I think my average purchase price is like 111, and I've held on to it for a very long time. I liked it up here at 170. Like I've always said, I think this gap up here at 177, I think that gets filled. Was it filled? Let me see. There was a gap back here. Looks like it got filled in January. Yeah. Oh, here it is. Here's the gap. This is the gap that I'm talking about, 250, 213. I think that gets filled at some point. The problem is I don't know what the current hoopla is doing to their earnings. And, you can type in Target into FinViz and kind of look at this. Pride backlash exposes rainbow capitalism problem, designer says. Target just dumped its Pride merchandise. Here's where it may go. Frustrated Target designers speak out after the company's latest move. Target handled this all wrong. And remember, we talk about good companies with good management and good products and good earnings will make you money. It's a good company. At this point, I question management. At this point, I question the product because are people less likely to do design, work with Target because of this on both sides? But are consumers changing their behavior? I agree with you, Brandon. They treat their employees incredibly well. But when a CEO comes out and on the earnings call, he said, we have so much theft to deal with, over, a couple $1 billion a year or something in theft. And then you have a situation where he's afraid for his employees because people are confronting and attacking them over this quote unquote Pride merchandise. And he stands up for the employees. I love that. What I would have liked to have seen is, keep the Pride stuff up there. Say, listen, I've got two things. I've got people threatening my employees and I've got theft. I'm going to confront both and hire no holds barred security guards. And we, could tell the other side of the thing, hey, we believe in the Second Amendment, find a balance. We believe in the Second Amendment. We're going to have armed security guards. We will be prosecuting anybody to the fullest extent of the law if they steal or if they threaten our employees or if they destroy property. We will be prosecuting you and take a hard stance like that and kind of own up to it from both sides. So I think they could have done a much harsher and a much more aggressive strategy. But I think they just handled it wrong. So in my mind, again, the kind of three pillars, good management, good products, and good earnings, I question, do they really have good management? Because remember, just a year ago, the problem with the management was inventory levels. And that's what caused this gap. That's what caused this gap was inventory levels. Now you've got a situation where he doesn't handle PR well. I think you've got a crisis in confidence of management here. I do think at 135, I mean, here's the thing. You look at Target, and their forward PE is 12. 12. Look at their biggest rival is Walmart at 21. Now, the question is, hire veterans. Exactly. We're going to hire veterans to be our security guards. We're going to provide them mental health benefits. And, again, I think you 100% get that. The average target price is still 167, and you're trading at 135. From the insider stand, that's Walmart. The average price target is 167. Let's look at the average target price. 178. So I think if you're adding at 135, I think you've got some bumpy roads ahead. In the algorithm, you have TrendSpider, I know. You're still out. The RSI is down at 23. I can't say that it's a great buy, and the reason I can't say that it's a great buy is, the three pillars. In normal circumstances, if you didn't have this controversy, I'd say, we've reached the bottom, and you're going to have a button hook like you did back here in December, and you rode it from 143 up for 20%. I hold it. I should have gotten rid of it. I might get rid of it. But, you look at the earnings, $1.89. 205. Do I think that people are staying away from Target? No, the problem is you're going to have is not people staying away from Target. It's the consumer groups like this designer. I don't think a name brand designer makes anybody go into Target. I mean, what kind of soccer mom is going into Target and going, ooh, I have there's this designer here. I'm going to buy the stuff just for designer. Not in this economy. So here, three high yielding dividend stocks that are too cheap to ignore. Target, Stanley Black & Decker. I wouldn't buy that one. Canadian Utilities, maybe I'd buy that one. Look at this douche. See, again, this author, Daniel Farber, Scott Levine, and Lee Samaha, they don't even bring up the controversy with Target. I mean, how can I even read this article? Yeah, Christian, I agree with you. Well, let's just put into perspective, Christian. Your boy ain't wearing work pants. There's no way I'm wearing work pants. By the way, GPT portfolio, if you didn't know, look at that tweet. You know what? Let me post this in. I'll post that in the Facebook group. Because I think there's good names in this one. Let's see. We're going to post this. Where's my screenshot? There it is. post that, and then I'll throw this into this. I'll just post it as a secondary. For some reason, when I post there, it's not like conservatives are all of a sudden going, hey, Target has this Pride line. I mean, listen, Apple put out a Pride watch band. Where's the conservative base going after the watch band folks? Melissa, if you're here, I think Brian, if you're here, I think you knew about 3D stocks. Yeah. I mean, that's Q-tip. Listen, the number one thing targeting kids right now is guns. I mean, guns kill more kids than anything. So, listen, if and I said this to my friend, and I have a lot of conservative friends, and I don't agree with cancel culture on both sides. I just don't. I really don't. If you don't like what a product does, don't buy the fucking product. Don't go to that fucking store. Don't, I don't mind people speaking out about it, but going in and confronting store people and trying to create, your own viral TikTok moment. And by the way, the best thing was that there was one guy parading around in the bathing suit saying how pretty he looked, and he was a conservative against Target. They found him on Grindr. For years, he's been on Grindr. So his problem, self-hating. I mean, that's essentially the thing. I don't think Walmart jumps off of it. And that's I think I don't think consumers, for the large part, are going to avoid Target and change stores. I just think Target getting products on the shelves will be the difficult issue. They had a line with some of the home and garden people with some of their home goods stuff. That's going to be difficult to renew if those people are conservative and say, well, my audience, and I've gotten worried about my audience, and I don't want to do business with you going forward like this. I think that's more the Target issue. Bud Light, shitty beer, you just change one shitty beer for another. But I think changing stores is different. And that's kind of the thing. I think Target, I agree with you, Christian. I think Target and Walmart fought Amazon. I think Walmart is winning. I just don't think that they do their online stuff as well as Walmart, as well as Amazon does. There's two ways that this wins, and this is kind of the fork that I see. I think local stores start winning. I also think that the stuff that's sold in Target, they may now go direct to consumer. And who benefits with that? Shopify. Because if you're setting up your own store, remember, Shopify, the biggest thing about Shopify is not necessarily the if you want to fulfill to customers and fulfill kind of, centrally and cheaply, you go with Amazon. If you're just selling a product like a shirt that you can fulfill via a fulfillment shop, you're going with Shopify. What's their names? The two people in Waco, Texas, who are Chip and Joanna Gaines from Home and Garden. They're going to Shopify. They're going to set up their store on Shopify, or they'll probably just hire an agency to do it, to be honest. What Walmart is basically, the reason Walmart, and you can see here, we'll take a look at a weekly of Target. So you take a look at a weekly of Target and you're in this descending. You've got this, it was similar to SPY, where you just got this descending and then you've got this ascending. Where are we going? Well, we're going down. This descending is winning there. Now, when you look at Walmart and we pull up a weekly of Walmart, you're in an ascending wedge, but it's two different things. This is going in an ascending wedge because Walmart has groceries. I personally shop at Walmart. So I do think that Walmart has an opportunity here as we go into a recession. More people will go into Walmart and spend. Only, I think, 10%, 20% of Target stuff is groceries. And if you've ever shopped at a Target for groceries, it's not a good experience. For boxed goods and mass-produced goods, it's pretty good. But for fresh fruits and vegetables, it's just not a good experience whatsoever. Yeah, Christian, it's sad. Yeah, when I'm in New Jersey, I go to Target and Aldi to shop. Here in Atlanta, I typically just go to Walmart. Aldi has all the fruits and vegetables that I need, the organic stuff. I like Aldi. Here in Atlanta, it's just Walmart. I mean, again, as Walmart grows out their grocery business, their other business are just ancillary. So what they're trying to do is get people who are shopping for groceries. The store near me, it's in Austell. It's a superstore, and they do put a lot of their Walmart's new quote-unquote tactics in there. So let me check the indices. By the way, it's 10:47. I was supposed to go before. I'm going to check this. And then, Christian, I'm going to reply to your email. Am I up today? Nope. I'm down a whole $900. It's telling me 0.00%, so. Let me see, Brandon. Brandon, I am so glad you got into that one. But yeah, Q-tip. Listen, Walmart, I think Walmart's going to open up. I mean, their supercenter will absolutely become a supercenter. INOQ down 4%. When it gets back down to 5, Brandon. Yeah, Q-tip. I think Walmart's a good company with good management. Here's what you have to see about here is, I think you can see this. These are the Waltons, I believe. Well, CFO. That's 3 months ago. Hold on. Oh, that's IONQ. Let's go to Walmart. 19, 22, 22, 22, 23. So in the last 3 days, what, 500 million bucks, 600 million bucks of sales? Well, only not. These are the Waltons. There were March 31st, there were some awards. Okay, fellas, I'm out. I got to go run my 10 miles. I'm down to 12.7% body fat. Your boy's getting down to 10. I'm going to be a 52-year-old ripped guy who's shaggy because I once was fat. So anybody's a doctor out there and wants to do surgery for free where they can just like fold my skin over, that'd be helpful. Okay, guys, I'm out. See you guys later. Tomorrow, about